Good morning. Welcome to Stock Market Today. It's Thursday, February 18th, 2021, and this is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider upon further analysis. Hit your inbox every trading day before the market opens. U.S. equities were mixed yesterday. Tech was the worst performer. Energy, comm services, healthcare, and the consumer sectors did outperform on the day. Treasuries were unchanged after that big move higher in yields on Tuesday. That was the big story in markets early this week. Dollar was mixed on the major crosses. Gold remains under pressure, down 1.5% yesterday. Bitcoin extended gains, and WTI crude settled up 1.8%. As we get to the desk this morning, S&P futures are down 40 basis points after Asian equities were mostly lower overnight. South Korea and Hong Kong, the big decliners. China did gain as it reopens following the Lunar New Year holiday. European markets are mixed. Treasuries are slightly stronger. The dollar weaker on the major crosses. Gold up 40 bips. WTI crude adds on. Up 50 basis points and is up over 3% on the week as the uptrend in crude oil meets a cold snap in the country, and we get a little bit of an acceleration to the upside. But that trend was very much in place before the happenings this week, especially down in Texas. Let's dive into the charts. Just some stalling activity in equities, and that's fine as far as I'm concerned. Let's stall. Let's build a base. Let's clean up some of the froth that everybody's talking about. Let's do all that while holding above our key support levels, SPY 360 to 370, Qs 315, then 300, IWM 200, then 210. Remember, IWM, we bumped that up a little bit this week. Above 340 on SPY, we're playing for 413. I still think there's upside in the Qs to 340. Then we'll reevaluate. IWM, just a solid trend. Leadership is leadership, and you want to stay with the leaders. I'm almost getting to the point where I feel like I should be putting the micro caps on here too. Maybe I should, because they've been a great dynamic in the marketplace, if you will. Sends messages, right? A lot of people tend to shy away from micro caps, and that's fine. But paying attention to the message is still important. And, micro caps, the riskiest of risky stocks, leading and outperforming and, participating. I mean, the message there is clear, and we've been talking about it for months. And we'll touch on breadth a little bit this week. Let's take a look, though, at the fact that the trend is up until proven otherwise. I'm going to keep that in red letters on this slide until that's no longer the case. Let's hit our market in a minute. More stalling as leading themes are overbought, and that's fine. Like, I was looking through a lot of the thematic ETFs, or even just themes in general, small caps, micro caps, growth, value, things like that. And then just overbought in a short-term time frame based on our work. And, we, again, as I've said in the past and say often, we assess that within the context of the trend. Overbought within an uptrend. That's fine. Use that to calibrate aggression levels. 3D printing is on the radar for an opportunity as it is not overbought by our work. Commodities take out another resistance level. We'll touch on that. Breadth remains constructive for the bullish trend. And as I said, futures do point to a lower open here today. Now, as we look at the major indices, you can see the mixed bag yesterday. The Dow up 30 bips, 9 to 4 bulls to bears. S&P flat to slightly higher, up 157 to 45 bulls to bears there. NASDAQ loses 0.5%, 27 to 9 bulls to bears, so still better than 3 to 1. And small caps down 0.75%, 778 to 98 bulls to bears. Bonds uptick, sending yields lower. Bonds uptick, sending yields lower, rebounding after that big backup in yields on Tuesday. Energy, once again, your leading sector, 2-0 bulls to bears. According to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bullish. Given the overbought nature of the market, I thought maybe, I know there are people who love to kind of trade counter trend, so wanted to look for potential swing trade opportunities or even just sources of funds. So what I did was I said, I took the Russell 3, and sticking with our Thursdays is a bearish screen for those who are looking for sources of funds or potentially ideas. Everybody's different. I speak to a wide audience. Give me the stocks that are neutral minus or better, right? So, neutral minus or worse rather. So neutral minus, bearish, very bearish. Give me the ones that are overbought with weak money flow, weak relative strength, a beta between 1 and 2. So what I'm looking for here are stocks that could potentially see a quick counter trend move to the downside. Remember, if this is not for everybody, because it's trading counter trend that we've talked about it, right? What the prevailing trend in the market is up. To use a sailing analogy, these types of ideas would be kind of sailing into the wind and against the tide. Not the easiest thing to do, but doable for some people. Honestly, I just want to highlight opportunities because, again, I realize I'm speaking to a diverse crowd. So then we kind of just run through our flow here: overbought, weak money flow, weak relative strength, and you get 18 names that I think at the very least are a source of funds. If you own these stocks, you say to yourself, should I be trimming them? Why do I own them? Maybe this forces you to do further analysis on a name that you own. You say to yourself, why is MasterCard on this list? And you do some digging. And you can see a chart here that on MasterCard, right? This is kind of what a lot of these stocks will look like. Beginning to roll over, so overbought, lagging, bearish money flow, and maybe rolling over. Think about it, the market's trading at all-time highs or just below all-time highs. MasterCard doing nothing. So if you own MasterCard, maybe you question your thesis, and you maybe questioning your thesis forces you to stick with it. I don't know. Maybe it's a longer term play and you just say, hey, thanks, Stan, for calling this to my attention. I dug in, I did the work, and I'm okay. Or maybe, you're more intermediate to shorter term and you say, hey, I didn't realize this. I own MasterCard. I think it's a great company, but, near term, this looks like an opportunity cost. And you do some digging and you say, you know what, there's something there I don't like. And it becomes a source of funds. I don't know, right? A lot of ways to think about it though. So this is an interesting screen, sticking with our theme of using Thursdays for bearish screens. Sector tracker now, moving to the last 5 days. For anybody who's been listening to me for any length of time, I think you know what I'm going to say here. That's a good looking board. Energy, fins, top of the list, comms, materials, right? The right kind of stuff is leading and up. And the defensive stuff is lagging / down. In an ideal world, these are all green with these 3 at the bottom: staples, REITs, utilities. But I think that, longtime readers of my work, listeners of what I have to say, will recognize that this is a good looking board. So I'm not going to say much about it. I'm not going to beat that horse. It's looked relatively close to like this all week. So I think if you're bullish, that's what you want to see. You want to see, cyclical risk on type sectors at the top and your defensive sectors at the bottom. All right, let's hit our industry in focus. Pharma services, past 6 months, outperformed by about 10.5%. But the power bar ratio here is neutral at 8-8, bulls to bears. And it's currently ranked number 19 of 21 subsectors. Axum, Ocular, and Amphastar are all very bearish stocks within the group, which is, there is a mixed bag here. There's no two ways about it. Now, the trend is up. So I will argue that that's the most important aspect here. The trend is up. And we're outperforming, right? So we do have a neutral rating. We do have a neutral power bar, but we have a strong trend, right? Trend is your friend until the end when it bends. And we have outperformance. So not only is it an absolute strength, but we have relative strength as well. However, in the near term, we're overbought, much like everything else in the market. And we have this kind of punk money flow. So, if I'm looking for pharma, I'm digging in on names rather than this particular ETF. That's how I'm thinking about it. There's something here, but you can't argue with this trend. It's up. No two ways about it. Lower left to upper right is an uptrend. Let's hit our trending names now. Verizon up on a disclosure that Berkshire took a stake. Wells Fargo, Fed accepted their overhaul plan. TSCO made a small acquisition that appears to be accretive. KHC didn't see anything company specific to drive trading in that name. Same with Disca, nothing company specific there. These names all up between 4.25% and 5.25% on the day. Loser side of the board, Henry Sheen's earnings take 8% out of the stock. IPG Photonics, same story. Anybody who's kind of interested in 5G, comm equipment, lasers, etc., you probably want to dig in on IPG Photonics and read about what they had to say. I think that they are a key player in the 5G landscape. So they're certainly a key player in the comm equipment landscape. You want to pay attention to that and read up on it if you're looking at the space and figuring out what they had to say and why the stock was down over 7%. PVH, no news, some 13Fs coming out, and it looks like Einhorn's fund, Greenlight, liquidated their position there, down 4.25%. Maybe that's driving it. Disca, Discovery, DFS, Financial, that's not to be confused with Disca on the left-hand side, down nearly 4%, FTI down 3.5%, nothing company specific to drive trading in those names. Let's look at breadth. We said we'd talk about it. Breadth's still healthy. Long-term, right, percentage of stocks above their 200-day moving average. For the S&P 500, we are still near 90%, 89%. That's healthy majority, right? We think anything over 60% is a healthy majority. So hard to make the case that that top chart does not fit the bill. Middle of the range or middle of the chart is percent above their 50-day moving average. So the intermediate term trend, 68%. So still a healthy majority in an uptrend for that time frame. But I will note the lower highs for these. So just something to be mindful of. We still defer to the trend, but the lower highs are on our radar screen. And that's fine. Advanced decline line holding the breakout levels. So at the end of the day, breadth is still constructive. If you want to know what I wrote in my note today, I said, breadth metrics that we track remain supportive of the bullish equity trend, despite some weakening over the past week, right? We've noted the divergences, but there's simply something to be aware of at this point. The weight of the evidence continues to argue for the uptrend in risk assets to continue, and that's my view. And I think that should be pretty clear from my comments and everything that I've been saying over the past few weeks. So we'll watch key levels to see if these divergences, remember, divergences are only that. Divergences, they're not meaningful until they're confirmed, and so far they are not. So we'll continue to monitor. Commodities, on the other hand, took out another resistance level. Now check this out. We've been talking about commodities for a while, and 52-week high for DBC is the Invesco DB Commodity Index, right? So broad-based, let's call it the complex, the commodity complex. 52-week high, but we've also gotten above this 2019, early 2020 consolidation, right? So look at what we had here. We had support that broke, that then became resistance, that proved difficult to get through, then COVID, boom. And now we've rallied back. So obviously this $16 level is important for DBC. And now we're back above it. So do we stay above it and rally towards 18 and possibly beyond? I don't know. I've been starting to talk about commodities, super cycles, things like that. What's interesting here is we also have a breakout or a potential change in the relative trend. So commodities relative to S&P. So that's what we're talking about here. And then finally, pullback in 3D printing. I think if we get to the 38 to 42 level, that presents an opportunity in PRNT. That'll wrap us up. Take us for a test drive. I'm back tomorrow.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.